In this video, we will talk about 4 companies which you must have seen in the thumbnail. So let's start. First company is Mrs. Bector Food, currently trading at 1,615. And if we look at 1 month return, it has been negative 11%. 6 month return has been still decent, 14%. 1 year return again very good, 37%. And 5 year return, if I see, it is around 171%. It got listed in 2020, December 24. And if I look at maximum, it will remain same because it is yet to complete 5 years. So we can say in the period of 4 years, it has given a return of 171%, which is not bad, which is very good return. Now this company is from the FMCG sector, and it is in the business of manufacturing biscuits and bakery related products. And it has 2 major brands, which is Cremica and Mrs. Bector English Oven brand. You must have seen breads of English Oven brand and various bakery related products. That is all the product of this company. And this company not only caters directly to the customer, it also caters to the restaurants like McDonald's, KFC. They provide breads to these restaurants. Currently, this company is not very big. It is still a small company with a market cap of just 9,900 crores. And this company, I believe, has a potential to grow even bigger in size. So from a long-term point of view, I think this is a good bet in my opinion. But as I always say, do your own research and then only take your final decision. And if you look at its recent quarterly results also, the results also have been decent. Although in most of the companies, the results were not that great. But this company was still able to manage good growth. You can see it is able to maintain around 17% growth in its sales. And if you look at the sales growth compounding, 5 year sales growth compounding has been 16%, 3 year 23, 12 trailing month 18, which is very good because in FMCG sector, the longevity is more. So if a company keeps growing at this pace also, I think it can give very good return in the long term. And profit growth is also decent. You can see stock price CAGR also has been very good. 3 year 60% return on a CAGR basis, 1 year 32%, and return on equity is also good. And now we are at the chart for Mrs. Bector. So today it gave an upside of around 3%. But if you look at the chart closely, you will see that this company is currently trading at its support. You can see that this was its support earlier. From this point, it bounced back. It went till this level again. It has come down to around the same level, which is around 1600. So at this point of time, I think it is at the right level. And if you calculate the total discount from its 52-week high, it is currently trading at a discount of around 26% from its top. So it's a good level to get into a stock in case you wanted to buy this company. And if you are interested in this company, I think 26% discount is a good discount, and stock is also available at its support. So you can take your decision after doing your own research on this company. But at this level, the company to me looks very good. Next company is Tata Motors, and it was up by 2% today. If you look at 6 month return, it is a negative 20%. 1 year return, nothing, it's almost flat. If we look at 5 year return, it has given a very good return of 303%. And the reason why it was able to provide this kind of return was because it went into the EV sector. It was, we can say, the first mover in the EV space. And recently also the designs of Tata cars have changed and improved a lot. And their build quality, we all know, has been great. And the most important thing is they have turned profitable. So earlier they were a loss-making company, but now they have turned profitable, and that is where you're seeing such a great return in an automobile company. And that has happened because there has been a change in management, and that is why it is very, very important to have a very strong management for any company. If a business is good but the management is not great, you will not be able to make money because the company will not grow. But if the company is average also, and the management is very good, then in that company also you can make exceptional return. Now here you can see that this company is currently trading at a PE of just 8.73, and from its 52-week high, it is showing a downfall of around 32%. Now here we can see the chart also, and you can see a downfall clearly from its peak. You can see from its peak, which was around 1160.70, it has now fallen to around 790 level. It went down till this level, which was around 725, but from that level it has bounced back a little. But right now also, I think this is a good level to get into this stock if you are interested in Tata Motors. If you are interested in the EV narrative, this is still a good stock to get into. And at this level it looks fairly priced, so the downfall seems to be very limited. The probability of an upside is more at this time. So you can do your own research on this company as well and then take your final decision. Our third company is Bikaji Food, and currently it is trading at 730, not 30, 724. 1 month return has been in negative, close to 13%. 6 month return positive 4%. 1 year return has been decent, 24%. 5-year return has been 128%. And if I look at maximum chart pattern, no changes because it got recently listed in 2024. Sorry, not 2024, 2022. So within a period of, we can say, 2 years, it has given a return of 128%, which is very, very good. And I think most of you are aware what this company is into. But for those who are still new to this company, this is again from the FMCG sector. And this is one of India's largest fast moving consumer goods brand. And the company products ranges from bhujia, namkeen, packed sweet, papad, western snacks, and all other snack related items. If you look at the market cap of this company is also not very big. If you look at other FMCG company, it is still at 18,000 crores. And I think this company has a potential to become 1 lakh crore after a few years. If we look at the downfall, currently it is down by around 28% from its 52-week high. And if you look at the recent quarterly result for this company also, the results were decent only. It was not that the results were bad. If you see in March, it increased its sales by 32, then 17, then 19. So let's see how the results comes this time. But I think the results are still decent and the company has a lot of headroom to become even bigger. So here you can see in the chart for BKG as well, this company is also currently at its support. You can see last time it went up from this level. Again, it has touched the same level, which is around 725, which is its support. So this level is also good level to enter into this company because again, the same thing, the downside is limited, but the upside is unlimited if your horizon is long term, minimum 5 years. If it goes further down, it can go down to maybe let's say 700, but this level also looks good to me. But if something really bad happens in the market, it can touch 600 level also, but that will be too much, looks little difficult. At this level also, you're getting a very good decent discount, and in my opinion, I believe this is a very good level to get into this company if you want to build your portfolio into FMCG sector. And with the budget coming in February, I believe that there will be a boost for the FMCG sector, and the boost will or might come in the form of tax relief, because right now the consumers are not spending a lot. So I think government might reduce taxes so that more money is in the hand of the consumer, and then they start spending it. So once that happens, I think the FMCG sector should give a good run up. That's my opinion, but let's see what happens. Last company, and the company which is very, very popular among retail investor, is Yes Bank. Currently trading at 19 rupees. 6-month return negative 25%, 1-year return negative 21%, 5-year return negative 57%. And if you look at maximum chart pattern, it has a chart pattern which I ask you guys to avoid. So from here till this point, the chart pattern was okay, but it was okay because the numbers were manipulated, and accordingly the profit was shown higher, and then the share price was also moving up. But then when the things came out, it all crashed, and now it has become a stock which we should be avoiding. No matter at what level this company goes, even if it goes at 10 rupees, 5 rupees, do not invest. That will be my suggestion. Stay away from these kind of companies. There are a lot of other companies in share market from where you can make money. Why you want to try making money from a company where there was a fraud already, irrespective of whether people have been changed, management has been changed. Invest in good companies, good management which are growing. Why you want to take risk with this company just because the share price is 19 rupees? Do not get lured into buying these kind of companies. And there will be a lot of videos also on these companies that now Yes Bank will change, now it will go up again, it will become its previous Yes Bank and all that rubbish. But my opinion will be stay away. A simple rule which you can follow if you are a new investor is any company whose share price is below 100, just skip it. By doing just this filter, you'll be able to eliminate 80-90% of the rubbish companies. I'm not saying all companies whose share price is below 100 are pathetic, but at least with this filter, straight filter, no rocket science, with this filter you'll be able to eliminate majority of the rubbish companies. So without spending more time on this company, my request would be please invest your precious time in studying other good companies, growing companies, where you can make money with peace of mind. So that's it in this video. If you like the video, please like and share. If you have any suggestion, please mention it in the comment section. We'll meet in the next video with some other information. Till then, bye bye.